if you miss what I'm teaching this night, believe it or leave it, you are not going to make money trading. Yeah, this is actually a free Zoom call for everyone. But in the nearest days or in the coming days and in the coming year, I may not be running free Zoom calls like this because however it wants to be, running a Zoom class from my MacBook, I think teaching people, I've sacrificed a lot teaching people. Yeah. And not just that, even up to this very moment, I am still working on personal development. I'm still studying books, getting other people's perspective on what works and what doesn't work. So you must not necessarily depend on me. That does not mean a change of strategy, but you should also get perspective from other people and know if it aligns with what you are doing or if you need one or two tweak to what you are doing. So for tonight, I'll be hammering on liquidity. Yeah, I'll be hammering on liquidity. And the only thing I need from you as it stands now is to give yourself that rapturable attention. If you miss it, believe me, if you miss it, if you miss any concept I'm trying to explain, this is me telling you that I don't believe that this very night class is going to profit you. Yeah, if you are not paying attention enough, it's not going to profit you. I will just be looking at some basic concepts on this liquidity of a thing. Delete everything you thought you knew in your mind and pay very close attention, because the secret I'll be dropping is what you need to pass any prop firm. And if you're not trading for a prop firm, that is worth what you need to do well on a personal account. And if you're not trading a personal account, that is what you need to do well in managing other people's money. Anything outside that, let me say something. Anything outside that, I don't really know. I think some of us have actually been sending in their chats to the Telegram, and I look at the chats and I will see their strength, I will see their weakness. Though one person has been always consistent on that. Well, for the other person, or for others, so to say, it's none of my business, because this is me and this is how I think. If you will not be humble enough to show me your errors, I may not be humble enough to spot out where your challenges lies. And since I'm not humble enough to spot out where your challenges lies, I can't help you. Yeah. So this is it. Around 1:10 p.m. I'm right? Okay, 1:10 p.m. on Telegram, I said I am looking at the 0.98388 range and the 0.98500 range, and which is actually this tick box here. So let me remove this now. If you watch, this is the two range I spelled out that moment, here and here. And I told us something that if I can get a market reaction around this range, I'm going to sell. Why? For two reasons. That range stores liquidity, and that liquidity actually aligned with the imbalance. If you carefully look at this candle here, you will notice something. There is an imbalance here. Let me know if I can shade that out. There is an imbalance here. I hope you can see it. There is an imbalance here. And even up to this very moment, that imbalance has not been filled. But has not been filled. So it has not been filled still. But this is the imbalance now that was meant to attract price. And this very point now is that range I was looking at. What really happened? Let's go to the 5 minutes. You saw the way the market stepped into the range and gave a change of character, a very quick change of character. And there was literally no room for entry. I took this trade. Yeah, I took the trade because when I saw this move here, I think I entered around here, so was waiting for this pullback. And these were already a change of character. No character change here. We had a double zone break. The change of character on the 1 minute becomes more sweet when you notice a double zone break. And every good or strong zone should not just have an order block, it must contain imbalance. So we had a double zone break. This is the first zone, this is the second zone. If you want to see it very well, you move to the line chart. So on the line chart, you can see it. This is a zone. That place, the market creates swings. All those spots are zone. So I'm not trying to hammer on order flow. I think I've done justice to that. If you don't still understand order flow, humbly go to the YouTube video and see things for yourself there. So today we'll be dealing on liquidity. And what's written is that liquidity is the market and market is liquidity. Liquidity lies everywhere in the market. Yeah. The reason price moves up and down is simply because of liquidity. Yeah. So, and I won't be spending much of my time hammering more on that. But believe me, everything you see in the market is purely liquidity. Liquidity is everywhere. Liquidity is everywhere. But now, I'm going to help you to spot some liquidity, because if you are looking at the charts, and let me put it this way, if you are looking at the chart, you don't know the level that price may step into or the level that price may assault, you are really losing. There is something you don't know yet. That doesn't mean that you will pinpoint accuracy. You can tell where the market will go or where it will not go. No, it doesn't happen that way. But to a degree or sustainable extent, a minimum of 65%, 70% of the time, you should be able to tell where to and from the market should be going, reacting, heading to. Now, so far so good. We've not tapped into this block. This is one. So far so good. We've not tapped into this block, which is two. These are profit levels. So far so good. We've not closed this imbalance here. Remember, this imbalance is on the 1 hour time frame. So they see it. They are seeing it. This imbalance is on the 1 hour time frame. Now, let me leave that, and let me talk about the liquidity, which is the driver of the market. And the market only moves because of liquidity. Now, I will be giving credit to people like ICT for helping us very well in the concept of this liquidity, and to so many great traders that have really helped me in terms of their mentorship, materials, videos, and so on. 90% of the work or the ball is in our court. Yeah, if you're not patient enough, you can make a good trader, and if you're not diligent enough to put up personal studies and so on, you will not make a good trader. Now, for tonight, I'll be dealing on visible and hidden liquidity. But before that is being done, let me actually tell us one or two things about the sell side liquidity and the buy side liquidity. Now, when it comes to the sell side liquidity, we need it to move. We need the sell side liquidity to move price up. Are you getting me? Yeah. Let me show you something. Okay, let me. If this is the line here, this is your line here now. From the usual pattern perspective or the one we know, I'll be telling us something. Just pay a very, very, very close attention. It's going to help you. From the usual perspective we know so far, you know those things they tell you things like you buy at you buy at and maybe supply, you sell at demand, support, resistance, all those stuffs. Yeah, they are cool, but we'll be attacking some of them today. Now, you take a look at what I'm doing now on this chart, and I'm going to label this one. Let me say these two sides of the market. I will label this side sell side liquidity, and I will label this side buy side liquidity. Now, I am not all knowing, but I will do my best to present this thing the way I understood it best and how it has really, really helped me. Now, for the sell side liquidity, this is what we need to move price up. For this side now, if you're looking at this market now, you will notice something. I've not actually delved into the let me say types of liquidity, but let me use something now to explain this. When the market was approaching this zone, I think one of us sent me a message on Telegram. He was like, why the market moves. So let me know if I can actually read out the message also. Okay. Let me know if I can get it. Okay. I'm still looking for the message. Let me know if I can go through the message. Okay, I can't actually see it through the message. But I think someone was like, I can't actually look at where the message is, but someone was like, why does the market maybe move at so point and so point? Like the person was like, he missed this move or something like that. But within me, I was laughing because if I was actually, because the session in which this thing occurred is not my interest. So I was not willing to trade it, but I saw this move coming. Remember what I said. Take notes, please. Take notes, please. I said something. Nobody should disturb me later. Please take notes now. I said something. I said the sell side liquidity is what we need to move price up. Now, for this move up to occur here, this move up, before it occurred here, the market stepped into this very zone, took all the orders. Now, what really happened? Let me use something like this. If I'm not aware, you will get this thing deeper when we start dealing on types of liquidity. The moment the market was entering this zone this way, the moment it was entering this zone this way, it was already creating orders, keeping orders. Now, on this zone, there are people that are waiting. If the market breaks below this low, to it will keep selling. The market will go down there and activate their sell stop order, not limit order. They are sell stop orders. They are stop orders. There are stop orders resting here, and there are stop orders resting here. Now, in addition to that, always remember that your stop loss is a form of order. If you are in a buy position and your stop loss, wherever you placed your stop loss, okay, let me see now. Let me put it this way. if you were trying to buy and you placed your stop loss around here, what you are only saying is that if you are wrong, the market should give your order to the sellers and the sellers should take it over. Now, the moment the market hits your stop loss, it's being sent to the account of the sellers. That's why the profit you made is someone else's loss. That is the moment your stop loss it is hit. That's what we call liquidity. So for someone to buy, someone must be selling. And for someone to sell, someone must be willing to buy. Now, if you are trading and you are not being able to spot where liquidity is resting in the market, you are by default that liquidity. Now, so having activated people's sell stops and so on, what did the market do? The next thing it does was, maybe after changing character, the next thing the market traveled up. It needed these people's order to be open, including stop losses to be hit, including sell stop orders to be activated. And when it retraced here, it activated some people's sell limit order, went down a bit before blowing it up. The same thing happened here. This little pullback here activated some people's order, and those people were like, we're in a success. They were keeping their profit. They did not exit the trade. They were still in it. So let me say, some even placed their stop loss somewhere above here. And they were enjoying the ride, waiting for their take profit to be here. The next thing the market did to them was change character and wired a very big move, took their losses. Now, watch what happened here. After this very big move, some people that were in this move were happy. Yeah, we are winning. Next time the market flew everybody out. And before it finally came this way. Now, while we are still looking at the concept of liquidity, now the same thing is applicable to the buy side. If the market wants to sell, it does not just start selling. It will first of all approach the buy side of the market, activate orders, people's buy stop, people's stop loss, and so on. Those orders that have been activated will now contribute enough liquidity for the sellers to do what they want to do. So let me take these drawings out. Now, that being said about buy side and sell side liquidity, if we want to move down, we need the buy side liquidity. And if we want to move up, we need the sell side liquidity. Now, that being said, let me focus on now the next subject now. The two types of liquidity we have in the market is we have the visible liquidity. We have the visible liquidity, and then we have this what we call the hidden liquidity. I just wish the time is going to be by our side to get through all this. We have the visible liquidity and we have the hidden liquidity. Now, for the visible liquidity, what we have there is relative, not exact. Sometimes it may be relative, sometimes it may be exact. Relative equal highs and lows, triple bottom and tops. You know those tops. So it may be equal, it may be close. Now, for the hidden liquidity, this is where the bulk of the matter is, in the hidden liquidity. Your inability to spot the hidden liquidity is a problem on its own. The visible liquidity is what everyone is mostly used to. But now let's look at the hidden liquidity. Above every old high, above every old high or low, there is a liquidity hidden there. Yes. Why? There are stop orders that will be resting on those zones above old highs and low. Stop orders in the place of either as a market order, as a stop order in itself, as a pure stop order, or as a stop loss order. So people mainly place their stop loss above highs and above lows. That's why sometimes the market will retrace back to raid those levels, activate people's stop loss just to continue the already move. Now, swing points. There are liquidity existing in swing points. If you have something like this, all these swings, whether major swings, minor swings, will have liquidity resting here. These are liquidity resting here. These are liquidity resting here. Liquidity are always resting on those swing levels, be it swing high or swing low. Let me continue. Now, we'll have trend line liquidity, where at least we are mostly familiar with this one, trend line liquidity. And we'll have what we call session liquidity. Session liquidity. I will get into all this. I pray time helps me do that. Now, session liquidity is you paying attention to the Asian high or the Asian low, the London high or the London low. And finally, this is a kind of liquidity I pay very close attention to. I pay very close attention to them. Previous daily high or previous daily low, and previous week high, and previous week low. You must always pay attention to this. If you really digest everything I'm saying this night, is enough strategy for you to actually make enough profit. Now, let me start with the previous daily high or low and what to expect. The first thing I do, if I want to actually trade the previous daily high or low, if I am in a new day, I will run to my charts and I will mark out the high and the low. The high and the low of the previous day. Now, having marked out the high and the low of the previous day, what I'm going to do is that I will wait for market reaction. Now, this is the previous low, previous daily low. And what did I get here? The market raided this previous daily low and gave me a change of character on the 1 hour. That's enough reason to buy. Now, let me give you this one strategy now. Go to your chart now. Mark out various daily and previous daily highs and low. Wait, if the market steps into those daily highs or daily low, rates those level, create a change of character. Let me say, if this is my previous daily low, and market does something like this, the market steps into this daily low, creates a change of character, as in red the low, creates a change of character, comes back. I always love buying from the zone. And my risk to reward is always between 1:3 and 1:4. Stop thinking about the 100 and the 70 something pips. Yes, you may catch it, you may not catch it. Just think about what happened to people on these moves. Most people that were on this move took their losses, and they never expected it to be so. So I'm still saying what I'm saying. Now, the same thing happens if this is a previous daily high and the market does something like this. The market, I think that was much. And the market stepped into this high raided the high, created a change of character. This previous daily high now, this place now is now our consign. This was purely what happened here. Are you getting me? This was purely what happened here. Now, in a continuation to that, you will see this almost every day in the market. The same thing is applicable to your weekly high and weekly low. Mark out the weekly high and the weekly low on your chart and wait for the market to react on those levels. That's why the algorithms pay more attention to the straight line charts than the straight line liquidity than the trend line liquidity. The only good thing most times algorithms does to this trend line liquidity is it will break it. Now, I will also give you a strategy on that trend line liquidity. But the market pays very close attention to this straight line liquidity. Why? What on the market keeps eyes on is this price. Yes, before we started this method of using charts, trading view, and so on, there was something called tape reading. So they keep their eyes on this charts. This price is the price that they are trading. Forget all those things. All those things is the graphical representation of these prices here. That's why the algorithms pay a very good attention to this price. That's why always be careful and respectful of liquidity that are built on prices. Now let me go to that of trend line. When in terms of trend line, one thing the market does to liquidity that are built on trend line is it will just, should I say, raid the trend line, and after raiding the trend line, it just maybe reverses move. Let me say we had a trend line like this of this nature now, and the market was actually respecting the very trend line move, and the market was respecting the trend line move. The market maybe something like this. It may just raid this trend line, give you a change of character here, comes back. Now, what should you be expecting? You should be expecting a buy. That's all. This trend line does not actually align with any price here. That's why you should pay close attention to those prices, but not just the trend line. But we only look at trend line because this is purely a measured and engineered liquidity. Now, the same thing is equally applicable. That's why when I tell you pick one session, so many of us do this mistake. We trade every session. That's I don't want to sound actually, but it will make you mad. Sometimes they might be generating liquidity in London session. You end up being the liquidity. You enter the New York ignorantly, you be a liquidity again. That's why I said focus on one session. When I step into New York session, for example, what I'm going to do is I ask myself, where is London high? I will take note of London high. I'm going to show you that today. Now, this is London high for yesterday. And immediately above that London high, look at it here. Now, look at the market opened at this green candle here. This is 8 a.m. So this is the high London made yesterday, London session. And above this London high, there was an imbalance here. That is what made me to give us that price range. I said, if price steps into this level and gives me a change of character, I will sell. You must train yourself to be able to spot liquidity. This is a raid of the previous daily low. Now, I have like few minutes left. A few minutes left. Roughly, I have 6 minutes left. I have 6 minutes left. So just give me 30 seconds. Let me arrange something here. So I have like 6 minutes left. The only trading strategy you actually need, if there is something you have to pick from me now, is you go to your chart now, start looking for, if you want to trade intraday, what's the Asian high, what's the Asian low? Sometimes that's why the Asian range strategy is something like this. If this was the Asian range the market made, this is the Asian range, and then London open, you had something like this. This is not a breakout. This might be just a raid of Asian high. The market will step back, come this low again. After stepping back, coming this low, it may maybe get into this level and continue the move down. Now, and it may not revisit this neck again until New York opens. And sometimes when New York open, if they want to revisit that level, they will raid that level above the high of London. Pack all the stop losses that were existing there, because these guys that made this move were already in profit. Give you a change of character and fly down. Now, this is what we call a liquidity grab. Now, on your chart now, I'm giving you now this assignment. Go through your charts and look for liquidity grab that has occurred on old high and old lows, swing points, trend line, session highs and low, previous daily highs and low, previous week's high and low. This is all you need. On all those levels, if you are trading the intraday swing, you target something like unmitigated blocks and the filling up of imbalances. Imbalance is an indication of an inefficient market. And when the market is inefficient, the market must come back to make it efficient. The market is not ignorant of it. So it's not just looking at levels. You ask yourself, where can liquidity be resting on this market now? Because if they want to sell, they will start destroying the buyers. And if they want to buy, I'll put it this way, they will destroy the sellers. So I keep telling people, nobody's going to keep money on the table for you to pick free of charge in this trading. If you harness this thing currently with your trading strategy, and you use a very nice risk management, and you avoid trading days like Monday, you concentrate on Tuesday, Wednesday, Thursday, and you reduce your risk on Friday. At least, no matter how, in a week, you should be able to see 5-6% of your account, depending on what your risk is. And no matter how, if you are with a prop firm, even if you don't hit the profit target, at least you should not be in a crazy drawdown. Having said that, I think I've really touched or maybe done justice to something I think it is very, very important. Now, in addition to that, let me put it this way. After the market raids or grabs liquidity from a given level, be it the visible liquidity or the hidden liquidity, one thing you must watch out for after that liquidity grab is what I call the change of character. Now, after that very change of character, when the character is changed, make sure let me explain this now with this. Let me say on this level now, we had a liquidity grab here. We had a liquidity grab here. If you don't spot an imbalance on this level that sponsored the change of character, please don't sell. Imbalance in as an indication that they pushed price to change the already existing order flow. Now, why are we interested in this? We are only coming back to fill the order of the inefficient price action and expect further drop. That's what really happened here. They've not filled this thing. That's why Anybody jumping into the sell, I pity the person. There is still an imbalance here. But let me show you something from the 5 minutes. On the 5 minutes now, you see all this imbalance. They did not feel it. They know what they're doing. They're going to come back on it. There's enough imbalance here. But the major reason is that they've gotten the liquidity grab. If you go down now now, let me equally add this now. If you are watching out for a change of character on the chart, please, except you have mastered time frame, you can scale from one time frame easily to another time frame. Please don't go beyond the 5 minutes. The minimum time frame you should be looking at for change of character should be the 5 minutes. And if you see a change of character on the 15 minutes, take it very, very serious. The 15 minutes is like should be likened to the bellwether time frame. Once it happens on the 15 minutes, it's sealed. If I notice a change of character, even if I'm seeing it on the 5 minutes, I will just I take trades of change of character on the 5 minutes, but I want to see what happens on the 15 minutes. So that being said, that's the end of today's class. I believe that all these points so far has been able to bless you in one or two ways.